John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hello, my name is John Ulzheimer. I'm a consumer credit expert. 30 years of experience in the credit industry. I've spent time at both FICO, their credit scoring company, and Equifax, one of the three generally recognized consumer credit reporting agencies. In today's topic, I'm going to discuss kind of a complicated issue regarding medical collections and how medical collections are treated by credit scoring systems. Let's define what is a medical collection. So if you were to go to a doctor's office or some sort of a medical service provider and you don't have insurance, then you're obviously expected to pay for the services at that time. If you cannot pay, or if your medical insurance does not cover the entire cost of the service that you received, then the doctor's office is going to attempt to collect the unpaid amount from you directly. So they'll send you invoices and statements, just like how a credit card issuer or a lender would send you a periodic statement demanding payment. If you do not pay the doctor's office, then eventually that particular debt is going to go into default, and medical service provider is going to probably outsource the collection of that debt to a third-party debt collector, more commonly known as a collection agency. Medical collections can be reported to the credit reporting agencies, and therefore they can and will show up on your credit reports. Having said that, the question remains, how do credit scoring systems treat or consider medical collections? So number one is, how does a credit score know the difference between a collection that's on your credit report for a medical debt versus a collection that's on your credit report for, say, a defaulted credit card bill or a defaulted cell phone bill? Well, the answer to the question is that it is a requirement for debt collectors to clearly identify who the original creditor is when they report that information to the credit reporting agencies. And so there is actually coding associated with a third-party debt collection account that clearly indicates whether or not it is a medical collection or some other form of collection. And second, if the original creditor is so-and-so doctor's office, then obviously somebody looking at the credit report can see that it is a medical collection. That doesn't really help in the context of credit scoring, because credit scoring looks at, it's a software, so it's going to look at the coding of the collection. So there is coding that can be associated with a collection that indicates that it is a medical collection. So that's number one. That's the important thing, is that you can clearly identify a collection as being a medical collection. That's number one. Now that we know this, the question still remains, well, is there any sort of variance in how those types of collections are treated by credit scoring systems? And the answer to that question, as it is common with respect to credit scoring, is it depends. And it's going to depend primarily on the generation of the credit scoring model that's being used. There are many different generations of credit scoring systems that are still commercially available and in use today. There are some models that were built over 20 years ago that are currently in circulation and still being used for lending decisions today. And so in some of those older scoring models, there is no difference in how a medical collection is treated relative to some of the newer versions. And so if you had a $5,000 medical collection on a credit report, some credit scoring systems are going to treat it as if it was a $5,000 collection for a defaulted credit card bill. So absolutely no difference. So those are some of the older models. And the newer versions of the credit scoring systems built by FICO and VantageScore, the news is considerably better. Not only are medical collections discounted, not ignored, discounted if they're not paid, but when eventually they are paid, then the newer credit scoring systems are going to bypass them. Even if they're on your credit report, the fact that they have a zero balance, the newer scoring systems are going to ignore them in their entirety. You choose to get into credit card debt, you choose to get into auto loan debt, you choose to get into mortgage debt. No one chooses to get into medical debt, right? No one chooses to get sick, and no one chooses to have to go to the hospital and have thousands of dollars of medical services rendered that you can't pay. That's not a choice that anybody makes. And so people acknowledge and recognize that a debt associated with a medical bill probably shouldn't be treated the same way as a debt associated with some other type of an extension of credit where you do choose to get into that type of debt. So in the newer scoring models, this treatment makes perfect sense. Once the collection has a zero balance, it's been paid, and the scoring models are going to ignore it entirely. And so in some scenarios, you could actually see the score go up and go up considerably, especially if the medical collection was the only derogatory entry on your credit report. So that's something that's also important and good to consider. There's a couple of other things that aren't really credit scoring specific, but do have to do with the credit reporting of medical debts. And there's two things that are important for you to understand. Number one is for a medical debt to make it to your credit report, the debt has to be at least 6 months in default before it can be reported by any sort of a debt collector. So why is that important? It's important for this reason. If that medical debt is eventually going to be paid by an insurance policy, then at least it's going to get 6 months worth of time for that process to run its course. And we understand that the claims process is not terribly efficient. It doesn't happen within a day or two. It can take time, especially if a claim is denied and a consumer has to go argue with an insurance company. You don't want to start sticking collections all over people's credit reports because the insurance claims process isn't efficient. So this 6 months buys some time for that process to work its way through without starting to pollute people's credit reports with medical collections. So that's number one. Number two, the Fair Credit Reporting Act has recently been amended to now include language that once a medical collection has been paid by an insurance policy, or if it's being paid by an insurance policy, then it has to be removed from your credit reports. So even though the collection still technically exists, it doesn't exist on a credit report any longer. And so in those scenarios, because credit scores only see what's on your credit report, once that item is removed, then obviously it's not going to have any sort of an influence on your credit scores any longer. So a lot of moving parts with respect to medical collections. And if you still have an outstanding question, or if you didn't understand some of the things that I explained today, then please leave some comments in the section below and I'll do my best to get to them. Thank you very much for watching. Have a great rest of your day.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.